Every time a customer swipes a card, your money splits several ways before you ever see it. And most of what you're charged, you can't even negotiate. My name is Robert Fojo, and I'm going to show you exactly where your processing fees go so you can finally see which part you're actually paying your processor. Now, here's the one idea that unlocks everything. Your bill is made up of two things: pass-through costs that go to someone else, and your processor's markup, which is the only part you're actually buying. The whole industry, unfortunately, blurs those two things together on purpose. So on a $100 sale, the biggest chunk is interchange, and that goes to the bank that issued your customer's card. A small slice, which are called assessments, goes to Visa or MasterCard, which those are the two biggest card networks. And then there's your processor's markup, which might be anywhere from 15 cents to $1.50. Everything else after that is what you keep. So what is interchange? Interchange is set by Visa and MasterCard. It is published publicly. You can Google the interchange tables and review all of the different interchange charges for every single card. And it is identical. This is the key thing. It is identical for every processor on Earth. Nobody has a better rate on interchange. It runs roughly 1.25% to a little over 3%, plus a few cents, depending on the card that's used. And that rewards card that your customer loves to use, it costs you more to accept that card. Now, assessments are the network's cut. It is a thin fraction of a percent. It's also non-negotiable, and it is also the same for everyone. So if a payment processing salesperson tells you they can get you a deal on interchange or they can get you a deal on assessments, they're not being straight with you. Now, here's the punchline. The markup is the only part that your processor keeps, and it's the only thing that you're negotiating. Everything else is passed through. Once you understand that, you can stop arguing about the wrong number. That markup is the one negotiable piece of this entire equation. And what would I be doing if I didn't cover junk fees? Junk fees are, they can be a real issue, depending on the statement, depending on the business, depending if you've ever even looked at your statement. And these comprise usually PCI non-compliance fees, statement fees, batch fees, monthly minimums, official sounding regulatory charges. Most of these are all just optional. And the processor can choose whether or not they want to charge it, which means they're negotiable. And if you can't negotiate them, then maybe they're a reason for you to leave that processor. Now, the trick is a lot of processors or salespeople point at the pass-through costs, and they'll make it seem like, well, your whole bill is unavoidable. That's how a 3.4% effective rate feels normal when a big chunk of that, possibly even a full point, is pure markup that you could just negotiate away. Now, a healthy small business usually lands somewhere, again, it depends on the business, around 2.3.5%, sorry, about 2% up to about 3.5% all in. Where you fall in that range and how much of it is markup versus just pass through, I mean, that's the whole game, and it really depends on a variety of factors. But if you're in this range, that's where you should be. How low or how high you are depends on the business, depends on how much of it is markup, depends on what types of cards you're paying. Depends on various factors. But that's something to keep in mind. If you want me to just look at your numbers for you, send me a recent merchant statement and I'll show you exactly what you're overpaying. It's free, no obligation. I like doing it. If I'm just a resource for you, then that's that. I'm not looking for anything from you. My email is on the screen, and then please subscribe for more plain English breakdowns like this one and I'll see you in the next video.